Alright guys, episode 6 I believe. It's going to be about the break. So, let me just quickly go over what you guys have learned. So essentially, you've learned about the daily bias. You've learned that you have to look at the past 3 candles. So let's just say for today, one, two, three. Two of them are bullish, one of them is bearish, so preferably you wouldn't be trading today. You would want to wait one more day until 3 consecutive candles are bullish, and then you can look for longs, okay? So vice versa, let's say 1, 2, 3 bearish candles the next day, then you look for shorts. Quite simple. And then the next thing, as I said, was you go to the hourly, and then in your daily bias direction, whether that's bullish or bearish, then you mark out the lows or highs respective to the daily bias. So for example, if the daily bias is bullish, then you mark out all of the highs. Okay, like so. Remember I explained what the highs were. Okay, just random highs like this. There's many. There's many. Look, there's one here. There's one here. Like, there's many highs. You guys should have done that as homework. There's even one here. And another thing, when it's bearish, when daily bias is bearish, then you mark out what? The lows. Mark out the lows. You mark out the lows. There's many. One here, one here, one here, one here. You just mark out all the lows when it's bearish. The next step in this strategy is literally called the break. So you mark out you find the daily bias, you mark out all your key levels, and in that direction, all you want to do now is literally wait for a break. You would want it preferably on the 15-minute, because that correlates very nicely to the 1 hour. So you want to have 1 hour key levels, and you want to have 15-minute candle breaks. So for example, let me just run you through an example, or even the trade that I took today. So daily bias is bullish. I'm going to mark out all of my highs. So there's a high right here. I'm not going to draw out all the highs because there's many. There's also a high right here. And there's also a high right there. Wait, actually, that's a bit too far in time. A high right there. Okay, so now, by the way, this is kind of hindsight because look, price has already played out. But imagine price was down here, okay, before all this big expansion. So I go to the 15-minute, okay. All I'm waiting for is a body close above my key level. So you see you see this red line? All I want is a body close above it on the 15-minute. So I don't know if you guys remember when I was talking about wicks and bodies, but basically the body is the, I'm sure you can make it out. It's literally the body of the candle. Let me just draw it out in fact. So you recognize this. This is the body, and this is the wick. So the line is the wick. The lines are the wick on the top and the bottom. Okay, so this is the body here and here. So basically, what I want you to do is wait for a body close above your key level. So for example, we draw this key level right here on the 15-minute. We wait for the body to close above. Right here, what does it do on this candle? On this 230 candle, it closes just on it, not really above it. So I want it to close above it. So the next candle, what does it do? It closes above it, because look, this is the close of a bullish candle. It closes above. That's well above this key level, which is very nice. That's what you need. So that's a break of a key level, okay? So let's try the next example. Over here, we mark out our key level because our daily bias is bullish. We want to mark out the highs. Now, when we mark out the highs, we go to the 15-minute. We wait for a break on the 15-minute. So we see this break as it closed above. Another break also on the 15-minute. So there's 2 breaks on the 15-minute. That's very strong in my opinion. And then later on, it also breaks again. Okay, let's try to find some bearish examples. So let's go to the daily bias real quick. Let's see. So 1, 2, 3. 3 is bearish. So this day right here, going to be looking for sells. Okay. So then what do I do when I'm looking for sells? I'm looking for, what am I looking for? I'm looking for lows. I'm going to mark out lows, okay? So look, we're going to mark out this low. We're going to mark out, this low. We're going to mark out this low. We could do that one as well. But anyway, and then after that, after we find out our key levels, what am I doing? I'm going to the 15-minute. I'm going to find a break. So a body close below our key level. So look, let's start off from up here. So look, price comes down to our level and it doesn't body close below. Yes, it wicks it, but doesn't body close. I don't see a body closing over it. I just see a wick on it, okay? So the only place that it does body close below is here. So you see the body closure? it closes below with this big white candle, okay? So it closes below, and that's our break of the level, okay? Let's go to the next one. So the next level was over here. I think I drew it, yeah, right here. So it closes below right there very nicely on the 50-minute. 1, 2, 3 candles closes below. That's very strong. So as you can see, the body closes. It doesn't wick it like the other one over here. It's a body closure. Let me just draw out the thing again for you. So as you can see, this would be a bearish candle. This is the wick. Oh my god, wait. Okay. Now let's pretend we had a key level. Let's pretend we had a key level over here. Yeah. So would this be a break right here? No, it wouldn't, because it hasn't body closed below. It's only wicked it. Would this be a break? Yes, because the body closed below it. I hope you guys can see that. Same with bullish. Did the body close above it? Yes. Right here? No, it wicked it. And hopefully you get that and that's clear. Let's just look for some more examples. By the way, when I finish this video, I don't want you to just watch it and that's it. Actually do your own homework, do your own like charting hours. Make sure you go on the chart yourself. Make sure you make up a story of this strategy essentially. So what I'm saying is practice it on your own chart. Mark up the daily bias, see which way it's going. Mark out your key levels in either direction, whatever it may be. Remember from the notes from the previous video. And then mark up the breaks when it breaks. Okay? Let's just go over a few more examples. So remember, 1 hour, daily is for the daily bias. 1 hour is for the key levels. 15 minutes for the break. Okay? Let's wait for the break on this level then. So over here, no, it doesn't break below. On this second candle, yes, because the body closes above it. But yeah, this was literally episode 6. I know it may not make sense so far, but it will hopefully start to make sense as all of the other videos release. But yeah, if you guys need help, any guidance, any questions, just add the Discord. The link is in the bio. And yeah, hope you enjoyed.